Well, hello everyone. This is take two of the 8/19/2021 presentation of the Indiana Constitution, Article 10, Finance. I'm hoping that the audio is better than last night. There apparently is something wrong with the hardware. Hard to believe that my version of the golden EIB microphone here could be not working. Maybe there's a mouse chewing on a wire somewhere. In any case, for this presentation, I'm using the internal microphone of the computer over here. The video cam's out there, and I hope there's not too much AV disassociation. There wasn't on the test run, so again, I apologize, but I don't think you could hear clearly the first time. So here we go. Quiet on the set. Take two. Good evening, Hoosiers. How are you feeling tonight? That bad, huh? Do you feel like you just ran into a hornet's nest? This is worse than whack-a-mole. These globalist, collectivist, socialist, statist pests sting with a vengeance. They swarm like the Borg on methamphetamine. You will be assimilated. Resistance is futile. Have we been brainwashed with years of mind control, psyops, into a zombie state of volitional oppression? Is this the end of liberty? Hoosiers, I say, no, we will not comply. There is a way out of this mess. There is a remedy for these malignant pests that is more effective than a can of hornet spray. There is a solution. The Constitution solution. Hello, I'm Dr. Chris McGarrah from Warsaw, Indiana, with yet another episode of The Constitution Solution. Tonight, we will resume discussion of the Indiana Constitution, more specifically Article 10, Finance. But before we resume examining the Indiana Constitution, I would like to take a moment to make a comment about a current event. War. Yes, war. Let me ask you to lay aside for the moment all the jingoistic rhetoric and simply consider the wisdom and virtue of founder James Madison, the major author of our Constitution. I call your attention to his work, Political Observations, from April 20th, 1795. Allow me to quote James Madison. Of all the enemies to the public liberty, war is perhaps the most to be dreaded, because it comprises and develops the germ of every other. War is the parent of armies, and these proceed to debt and taxes. And armies and debt and taxes are the known instruments for bringing the many under the domination of the few. In war, too, the discretionary power of the executive is extended. Its influence in dealing out offices, honors, and emoluments is multiplied. And all the means of seducing the minds are added to those of subduing the force of the people. The same malignant aspect in republicanism may be traced in the inequality of fortunes and the opportunities of fraud growing out of a state of war, and in the degeneracy of manners and of morals engendered by both. No nation could preserve its freedom in the midst of continual warfare. Let me repeat that. No nation could preserve its freedom in the midst of continual warfare. War, armies, debt, and taxes bring the many under the domination of the few. I don't have anything to add to that. But remember, those of you who do not know your history are doomed to repeat its mistakes. Okay, enough commentary. Let's get back to exciting Article 10. Now remember that Indiana has had two constitutions. The first was from 1816 and the second was from 1851. The second one has been amended many times to give us the 2018 version. Finance. You might think boring compared to, say, the Bill of Rights. But no, this is just as important as the Bill of Rights. We are speaking about money. Yes, money. Your money that the state government coerces from you at the point of a sword and then proceeds to apply to budgetary items that may or may not be a waste of your money. Remember the three questions? Is it constitutional? Do we need it? Well, no, I got that wrong, sorry. Is it constitutional? Can we afford it? Do we need it? In that order. That's what happens on take twos. In the 1816 Constitution, I can find maybe 5 one-line references to finance and revenue. Then, after the state of Indiana went bankrupt, spending on infrastructure, specifically the Wabash and Erie Canal, the 1851 Constitution was developed to somehow solve the budget problem. Actually, they wanted more revenue so they could keep spending. Isn't that always what happens with government over time? The 1851 Constitution actually included an Article 10, finance. Now, since 1851, there was a personal property and a real estate tax when there was none in 1816. More money, more spending. A familiar theme in government. And these taxes and the regulations that were generated with them now mean that actually no one, that means none of you Hoosiers, truly owns property or real estate. You don't really own it. You lease it or rent it from the state through your taxes. Because if you don't pay your taxes, just for that little amount of money, they will seize and liquidate your personal property or real estate. So you don't own it. Isn't government wonderful? Don't even get me started. Then with an amendment, oh, you're going to love this, an amendment in 1932, the income tax was added. So now you don't actually earn money. The state allows you to keep a portion of your earnings after they skim off the cream. Kind of sounds like the mob to me. With the 1966, 2004, and 2010 amendments, the finance article is now 3 full pages of mind-numbing legal accounting word salad. So, are you ready? Remember, I'm reading from the Constitution of the State of Indiana, annotated by Andy Horning. You can find it online. He published that in 2010. Okay, take 2. Forgive me, I have to go back a few pages. Okay, are you ready, Hoosiers? Article 10, Finance. Section 1, A. Subsection A, subsection little a. Subject to this section, the General Assembly shall provide by law for a uniform and equal rate of property assessment and taxation, and shall prescribe regulations to secure a just valuation for taxation of all property, both real and personal. Section little b. A provision of this section permitting the General Assembly to exempt property from taxation also permits the General Assembly to exercise its legislative power to enact property tax deductions and credits for the property. The General Assembly may impose reasonable filing requirements for an exemption, deduction, or credit. Little c. The General Assembly may exempt from property taxation any property in any of the following classes. These are classes that may be exempt. Number 1, property being used for municipal, educational, literary, scientific, religious, or charitable purposes. 2, tangible personal property other than property being held as an investment. 3, intangible personal property. 4, tangible property including curtilage used as a principal place of residence by an A, owner of the property, B, individual who is buying the tangible property under a contract, or C, individual who has a beneficial interest in the owner of the tangible property. Little d. The General Assembly may exempt any motor vehicles, mobile homes, not otherwise exempt under this section, airplanes, boats, trailers, or similar property, provided that an excise tax in lieu of the property tax is substituted therefor. Oh, so they can exempt it, and then they can make a new tax on it. Either way, you pay tax. Oh, and what is that obscure term? Curtilage. Curtilage. That the curtilage refers to the house and the immediate property around it, usually defined by a fence. So like the traditional dwelling yard fence. The outfields and outbuildings, things like that. Well, maybe not outbuildings, but the big outfields don't count as the curtilage. Okay, where were we? Boats, trains, and planes, and other things here. Okay. Little e. This subsection applies to property taxes first due and payable in 2012 and thereafter. The following definitions apply to subsection F. Number 1, Other residential property means tangible property other than tangible property described in subsection C-4 that is used for residential purposes. 2. Agricultural land means land devoted to agricultural use. 3. Other real property means real property that is not tangible property described in subsection C. 4. Is not other residential property and is not agricultural land. F. This subsection applies to property taxes first due and payable in 2012 and thereafter. The General Assembly shall, by law, limit a taxpayer's property tax liability as follows. I believe these were the tax limits under the Mitch Daniels administration. I could be wrong here, but I think this is the so-called 1, 2, 3% rule. Okay. 1. A taxpayer's property tax liability on tangible property described in subsection C-4 may not exceed 1% of the gross assessed value of the property that is the basis for the determination of property taxes. 2. A taxpayer's property tax liability on the other residential property may not exceed 2% of the gross assessed value of the property that is the basis for the determination of property taxes. 3. A taxpayer's property tax liability on agricultural land may not exceed 2% of the gross assessed value of the land that is the basis for the determination of property taxes. 4. A taxpayer's property tax liability on other real property may not exceed 3% of the gross assessed value of the property that is the basis for the determination of property taxes. 5. A taxpayer's property tax liability on personal property other than personal property that is tangible property described in subsection C-4 or personal property that is other residential property within a particular taxing district may not exceed 3% of the gross assessed value of the taxpayer's personal property that is the basis for the determination of property taxes within the taxing district. G. This subsection applies to property taxes first due and payable in 2012 and thereafter. Property taxes imposed after being approved by the voters in a referendum shall not be considered for purposes of calculating the limits to property tax liability under Section F. I told you this was word salad. This is what happens when you have legislatures with out-of-control spending, and they get a bunch of lawyers and some accountants in a room together, and they come up with word salad like this, which means that they own you. Yes, governments need financing, but I don't know. This may be a little much. It was much simpler in 1816. Okay. H. As used in this subsection, eligible county means only a county for which the General Assembly determines in 2008 that limits to property tax liability as described in subsection F are expected to reduce in 2010 the aggregate property tax value that would otherwise be collected by all units of local government and school corporations in the county by at least 20%. The General Assembly may, by law, provide that property taxes imposed in an eligible county to pay debt service or make lease payments for bonds or leases issued or entered into before July 1, 2008 shall not be considered for purposes of calculating the limits to property tax liability under subsection F. Such a law may not apply after December 31st, 2019. Wow. Did you understand all that? Probably not. It was written that way. So you'd just get a bill and not understand it. Now, Andy Horning has some interesting comments here. He comments, the embarrassingly ignorant new opening phrase, subject to this section, added November 2010, is a clue that what follows is legal madness. This whole article has been transmogrified into an awful injustice. It should be nullified, erased, and or otherwise scrapped. It's justly unenforceable as truly uniform and equal rate of property assessment can only be 0. And the just valuation clause renders the tax impossible because of the state's illegal spending. Taxing people out of their homes to subsidize pro sports, for example, is not only immoral, it's also unconstitutional by not only the constitutional prohibition on such spending, whatever isn't authorized is denied, Article 1, Section 25, but also by the constitutional prohibition on such takings, see Article 1, Section 21. But the letter of this law keeps getting worse. The 2004 removal of inventory from 2, tangible personal property as above, ensured that personal property taxes would go up. The 2004 addition of more verbosity, starting under 4 above, ensured more confusion. And now we fixed it with caps dependent upon that vagary of vagaries, gross assessed value. Who are we fooling with these caps? Apparently ourselves, since voters approved it. This part of the Constitution has been ruined, and property tax cannot ever be levied without corruption, injustice, and bad result. That's Andy Horning's comment. Let me move on. Section 2. All the revenues derived from the sale of any public works belonging to the state and from the net annual income thereof, and any surplus that may at any time remain in the treasury derived from taxation for general state purposes after the payment of the ordinary expenses of the government and of the interest on bonds of the state other than bank bonds shall be annually applied under the direction of the General Assembly to the payment of the principal of the public debt. Section 3. No money shall be drawn from the treasury but in pursuance of appropriations made by law. And Andy Horning comments, a good number of appropriations are made by bureaucracies in flagrant violation of this law. Section 4. An accurate statement of the receipts and expenditures of the public money shall be published with the laws of each regular session of the General Assembly. Section 5. No law shall authorize any debt to be contracted on behalf of the state except in the following cases: to meet casual deficits of the revenue, to pay the interest on the state debt, to repel invasion, suppress insurrection, or if hostilities be threatened, provide for the public defense. And Andy Horning comments, deficits in revenue are not the same as deficits in desired spending. And bureaucracies do not transcend this law. Most government debt is illegal, no matter how it is described. See Article 13. Section 6. No county shall subscribe for stock in any incorporated company unless the same be paid for at the time of such subscription, nor shall any county loan its credit to any incorporated company, nor borrow money for the purpose of taking stock in any such company, nor shall the General Assembly ever on behalf of the state, assume the debts of any county, city, town, township, nor of any corporation whatsoever. Andy Horning comments, remember this when you read Article 11, Section 12, and consider that even the state's well-intended bailouts of local school and governing units are specifically illegal. Number 7, no law or resolution shall ever be passed by the General Assembly of the state of Indiana that shall recognize any liability of this state to pay or redeem any certificate of stock issued in pursuance of an act entitled an act to provide for the funded debt of the state of Indiana and for the completion of the Wabash and Erie Canal to Evansville, passed January 19th, 1846, and an act supplemental to said act passed January 29th, 1847, which by the provisions of said acts, either of them shall be payable exclusively from the proceeds of the canal lands and the tolls and revenues of the canal in said acts mentioned, and no such certificates of stock shall ever be paid by this state. That was added by Amendment 1873. Andy Horning comments, the state went broke investing in public transportation. Did you know that? Infrastructure, public transport, the Erie and Wabash Canal. It used this calamity as an excuse to scrap a good constitution, write a weaker, more ambiguous one, and deny its own accountability for the mess. Scandalous, terrible behavior. I don't know why we trust politicians with our money, comments Andy Horning. Section 8, pay attention here. The General Assembly may levy and collect a tax upon income from whatever source derived at such rates and such manner and with such exemptions as may be prescribed by law. Added November 8, 1932. Thank you, progressives. Andy Horning comments, y'all ought to kill this section. It solved no problems for us and created many. Oh. That was it. That completes Article 10, Finance. Like I said, that was probably one of the worst articles for the average person to try to understand. But that's what happens when the state goes wild. Well, Hoosiers, that's it for Article 10 Finance. I will see you next on Thursday, September 2nd, 7 p.m. on Facebook and YouTube for the discussion of Article 11 corporations. Hopefully I can have all this technology harnessed by then. So in closing, Hoosiers, I want to remind you all to follow doctor's orders. Remember, wash your hands. Don't touch your face. But above all, keep your distance. Keep your distance from those socialists, statists, globalists, collectivists, politicians, and bureaucrats. Because now, Hoosiers, you know exactly who they are. The curtain has been pulled back, and they can no longer hide. So in 2022, Hoosiers, let's drain the Indy swamp. Well, in closing, let me just say that as in the closing of every episode of the JBS Constitution Corner videos, they say, don't just know your Constitution, live it. Good night. I hope this take 2 had better audio so that you could understand the word salad of finance. Good night. Or actually, it's afternoon the next day. See you.